I got some big news for you guys that we have to cover for Tuesday. And essentially, we got two really big things. We got the trade deficit, and we also have the FOMC meeting. You can see right here, the trade deficit is probably out by the time I made this video, but we're preparing right now for Wednesday, May 7th, FOMC meeting. Very crucial you watch this. And in today's video, I'm essentially going to cover Palantir and what's going on with the earnings. They're just reporting right now. My position on Palantir, which, I'm actually pretty excited about. And I told you guys to be very cautious about Palantir. Despite being bullish long term, short term, a lot of the excitement's already baked in. So I'm really happy because in my Discord community, we're making money right now. I have done two different strategies on Palantir. I have done the call credit spreads, and I also have a caller in place. So I'm protecting myself very well on Palantir. But let's cover one thing at a time. I just made this video. Hope that you watched it, because if you watch this video, it would actually save you a lot of money, because I was cautious on Palantir going into earnings. But let's talk about the trade deficit. Let's talk about the FOMC meeting, and let's just get into the action and tell you what you need to know. So look, in terms of the trade deficit, this is a very important metric because it has a lot to do with the SoFi, Nvidia, Palantir, but also has a lot to do with the overall general economy. The reason it matters is because trade deficits affect how fast the economy is growing. And it's a pretty easy formula. Like, GDP is exactly what we buy plus what businesses invest in plus government spending, and essentially what we sell to other countries and what we buy from them. So the net export, it's called. So what we import, what we export. And this is the GDP formula. So if we import too much and we export too little, it drags down growth. All right, so that's why the trade deficit is going to be really important. That's going to be released by the time this video is made, and I'll tell you how to break that down. And after we talk about that, we're going to talk about 2 p.m. FOMC meeting, because the market and the rate decisions will have a really huge impact as well. So we got two very urgent matters. Let's continue with the trade deficit, and then I'll do one thing at a time. So this trade deficit number right here, essentially what we're looking for and what stock investors care about is a growing deficit will mean that the US companies are selling less overseas, which is less profit, which is a bad thing, okay? Now, a smaller deficit means that exporting is very strong from the US, which is better for companies and better for the market. And that's the whole reason, that's a big reason why there's a whole lot of conflict with China. It's because of the trade deficits that we have. Trump and government and the administration wants America to have more homegrown manufacturing, and for us to get better at exporting and not be as reliant on others who are quote unquote ripping us off. Not going to get political. I'm just here trying to make some money. I don't care about politics at all. So talking about the trade deficit, a larger trade deficit could raise recession fears. So obviously that's a big concern, and potentially hurting SoFi's lending business. If we have recession fears, that's going to hurt SoFi's lending business. Well, less people will be taking loans when there's a recession fear. So this is, that also could have been part of the reason why SoFi, despite having really good earnings and having 11 million people essentially using their products, hasn't gone up. It's kind of the same reason we see right now for Palantir. It's because a lot of this is baked in, and there's also recession fears. So there's obviously a non-zero chance of a recession. It's 10, 20%, whatever you place it at, it's non-zero for sure. So, the deficit, if it's bigger, could raise recession fears and potentially hurts SoFi's lending business, as investors will be worried about consumer loan defaults, while a smaller deficit will actually be a good signal to stable economic environment and conditions that support SoFi's growth in personal loans and financial products. So very big stuff, especially for the next quarter, coming out today and Wednesday. So again, this is going to be the most important update I'm making. And also, the deficit has a lot to do, and it also affects the dollar. So a big deficit can definitely weaken the dollar, and a weaker dollar will actually help exporters, but may hurt people who rely on imports. So, it's a very delicate economy, and everything's really intertwined. And I think overall we want a strong dollar. We don't really want a weak dollar in the long term. We want a strong dollar. So what you should watch out for is essentially, are we importing more? Because that means strong US shoppers. And if we're exporting less, well, that could actually show that the world economy is slowing. So we want to keep our exports high, and high imports is also fine, right? Because that means we have a strong consumer, even though some of that money might be going overseas into other companies' pockets. So the FOMC meeting, I would say, is more important than the trade deficit because the market will watch not just the rate decision. So the rate decision will, likely hold steady. I'm not expecting too much on the rate decision there, but a lot of what the market wants to know from Mr. Jerome Powell is, what the Fed will say about the future. Are they planning to cut rates? And how does that picture look like, right? Because a lot of what he says he will do will really significantly impact the market. For example, let's say that we have lower rates, that's going to help SoFi. We'll go back to my portfolio right here and I'll show you SoFi in just a second. We'll look at some technical analysis of Palantir and yeah, we'll just keep Palantir on the screen right now. But look, if it's lower rates, it's actually going to help SoFi in many ways because it makes it easier for personal and student loans because they're more attractive. I mean, are you going to take a student loan for 3%? Count me in versus, 30%. No. I mean, that's crazy, right? By the way, fun fact, I actually took out a loan when I went to college and I invested that loan. So I actually took out a loan that I didn't really need. So it was pretty interesting. But look, with lower rates, then you're going to have a boost in demand for refinancing, which again is a good thing for SoFi. So you really want to understand what's going to happen with Jerome Powell's FOMC meeting because it has a huge impact on the entire economy as well as all the stocks that I hold, the stocks that I've been covering on this channel. And FOMC talk of a rate cut is going to be, pretty bullish for SoFi actually. Now talking about Nvidia, Nvidia is also sensitive to interest rates. So lower rates boost high growth stocks like Nvidia because, more future cash flow is more valuable today with lower rates. I mean, guys, to break it down simply, which no one really talks about, the value of a stock today is all of its future cash flows discounted to the present. It's called the discounted cash flow model. It's the fundamentals of finance. If a YouTuber is not talking about that, they're not qualified to really go over a lot of stuff. They don't have a formal education, which I guess you don't need a formal education to be successful in life. But look, you need to know all future cash flow discounted to today, the present value. This is the most important metric of all. And obviously it's pretty hard to predict all that future cash flow. That's exactly what companies, analysts that work at big companies are doing. And lower interest rates is beneficial because a big factor of a discounted cash flow model is the discount rate. The discount rate is based on interest rates. And if interest rates are lower, then it will reduce the discount rate. So that is a really good thing for Nvidia, and it's a good thing for the overall stock market. And if the Fed hints at a cut, well, Nvidia usually will skyrocket because of that, as investors will rotate more into growth. Because look, when interest rates are low, then the growth companies, they have lots of future cash flow, and it's worth a lot more because the discount rate's lower. Whereas if interest rates go up, then the value stocks would kind of hold a little bit more steady, whereas growth stocks would be hurt more since all the cash flows in the future will be hit harder because they're being discounted, right? So the fundamentals of finance is a dollar is worth more today than it is tomorrow. I mean, if I ask you what would you rather, a dollar today or a dollar tomorrow, you're going to say a dollar today. And what is a dollar worth in a year? Well, if there's a discount rate of 10%, then a dollar in 1 year is going to be worth 90 cents. So you can see here how it's pretty interesting. And then, if I ask you what is a dollar worth in 2 years at a 10% discount rate, well, 1 year away, it's worth 90 cents. And then 2 years away, it's worth 81 cents, right? So you'd be willing to pay 81 cents today for a dollar in 2 years at a discount rate of 10%, because 10% of a dollar is 10 cents. But then 10% of the 90 cents is going to be 9 cents. So it's called exponential decay. Some financial topics in college education here, but it's, hopefully that you get it. It's not too difficult. Now let's talk about Palantir in greater detail. So like Nvidia, Palantir is a growth stock, right? So Palantir is looking at a lot of future cash flow. So lower rates are more attractive because, those cash flows are going to be more valuable. And they're going to be discounted today and be worth a lot more. Also, government spending, which is a big Palantir customer, right? Palantir's got their hands deep in that government pocket. They're like, let me get that money, right? I got a Louis Vuitton wallet. Like, let me get that money, Palantir. Let me get all this money, right? I got some Russian rubles. I got some Moldovan lei. I got some Polish zloty. I got some Thai baht, more Polish zloty, more Thai baht, and then of course I got the hunnits. Right, so I have some currencies here. I have even more currencies in my other wallet, but look, Palantir They're like, let me get the government wallet. Let me take everything that you got. Let me get your credit card. Let me spend that credit card money too, right? What we want to see is we want lower rates for all stocks, all the growth stocks. And Palantir government spending can actually increase if borrowing gets cheaper. So, governments, they're selling bonds all the time, and there's treasury bills, and the government has a lot of debt. And actually, lower interest rates is good because you can refinance that debt, and the government itself can borrow more money. So if the government borrows more money, well, they got more money to spend, and Palantir is going to be benefiting from that. Now, if you also look at the hawkish Fed, which we can say it's like no cut at all, it can actually mean slower momentum for Palantir. So right now we see here after hours, Palantir is essentially down 8.62%, and the earnings call is going on right now. I'm going to listen to that later. But the position that I have on Palantir is actually a lot of call credit spreads, which you can see I'm down 27 grand. But if Palantir is going down, my position is actually going to benefit. So we'll see. I'm hoping that me and my Discord community, we're about to be rubbing our hands together and making some money on Palantir. And again, I'm not bearish on Palantir, but I made a bearish bet on Palantir in the short term, given how much it has skyrocketed in the short term. I mean, look, don't get me wrong, but when a company like literally moves up in 1 month 67%, I mean, look, I can be a bull. I can be as bullish as this gets, right? I can be like a Wagyu beef bull in Japan or whatever. But when it's up 67%, I gotta be more cautious, and that's what I said in this video that I posted 6 hours ago. Well, yesterday when you're probably watching this urgent video, I cautioned to exercise caution on Palantir. So what I'm hoping to see, and I'm an advocate for long-term investing, and I sell options, and we do long-term option selling here. But when a stock goes up this much this fast, I have created a bit of a negative delta exposure to try to hedge the position and try to save money if it goes down. I think that's incredibly important. And I'll tell you this, right now, Palantir is down 8.5%. I have actually lost $0. I'm actually up. So I'm actually making money right now because I'm positioned for a bearish move in the short term. And essentially tomorrow, finally, I'm hoping that Palantir opens at 110, 109. I can just close my position tomorrow, but we'll see, right? The position here is going to make some money. I may still be down. We will see. But I've also created a bit of a collar on Palantir, which I can talk about in a different video. This is an urgent update, and I want to keep this video short. So yeah, if you want a video on the collar strategy, I can make that for you. Just comment down below. Ask me any questions. I am reading all the comments. And yeah, subscribe, and yeah, I'll talk to you soon.